What if I told you a 40 billion euro tech giant just lost a fifth of its value in a single morning? This is Kenya News Update today. Coming up, you'll discover why a French software titan is on track for its worst trading day ever, what it means for global tech, and the shocking numbers behind the crash. Meet Dassault Systems, a European tech champion for decades. The company behind the 3D design software used to build everything from cars to airplanes. On Wednesday morning, its life shattered. Shares plummeted as much as 21% in early trade. For a company of this size, that's a financial earthquake. But here's the twist. This isn't just about a bad day on the stock market. This is about a fundamental crack in a corporate empire, and it all started with a single earnings report. The company published its fourth quarter results, and the numbers were brutal. Revenues from its core software business dropped 5% in the final 3 months of last year. For the full year, total revenue was flat at a weaker than expected 6.24 billion euros. Analysts had been expecting 6.3 billion. That miss, while seemingly small, sent shockwaves through investor confidence. Trading of the stock was briefly suspended at the open in Paris due to the sheer velocity of the sell-off. By AM London time, losses had pared slightly to around 18% lower. But here's what nobody's talking about: the guidance. The company also set its revenue growth target for 2026 in the range of just 3 to 5%. For a high-flying tech stock, that's a signal of slowing growth, a potential end to an era. And then, something shocking happened. The CEO tried to pivot the narrative entirely. Pascal Dalla said in a statement that Dassault Systems will lead the industrial AI transformation through its offering called 3D UNIV plus RSES. He called it a long-term commitment to redefine how industries innovate. But the market wasn't buying the future vision. It was focused on the present reality of declining software sales. This is the part that will blow your mind. A single-digit percentage miss on revenue expectations triggered a multi-billion euro wipeout in market value. That's the power of perception in today's hyper-connected financial markets. The story isn't just in Paris. It's a warning shot for tech investors everywhere. When growth stalls, even giants can stumble. The implications are massive. For employees, for competitors, and for the entire European tech sector that looks to Dassault as a beacon. Some say this is a necessary correction, a wake-up call for a company needing to reinvent itself. Others see a fundamental breakdown, a sign that its traditional markets are saturated. The controversy is clear. Is this a temporary blip or the beginning of a long decline? The CEO says focus on 2025 and 2026 for disciplined execution, but investors today voted with a historic sell-off. The tension is palpable. A company betting on artificial intelligence for the long term is being punished for missing short-term targets. So what does this mean for you? It's a masterclass in market psychology. It shows that in the age of instant information, confidence can evaporate faster than you can say earnings miss. The payoff is this stark reminder. Even the most established companies are not immune to the ruthless judgment of the stock market. One bad quarter can rewrite history. Do you think this crash is an overreaction or a justified correction for slowing growth? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking global business news that impacts us all.